There's still a lot of uncertainty, and I'm so curious for your view of the future here. When we look back on this time, what do you think the defining tech trends or inflection points will be of the COVID era?
Well, I think this is going to turn out to be kind of a shake the snow globe moment where a lot of things settle out in ways that might surprise us. Some of the trends are pretty clear from the past year. The acceleration of telehealth. We've seen the benefit of companies like Talkspace from Revolution in that. We've seen the benefit of acceleration of e-commerce. Companies like BigCommerce have benefited from that. But I think the bigger story, or the longer term story, is how we're unbundling how you live and how you work. And that's accelerating a lot of the trends we've been talking about now for a decade around regional entrepreneurship, the rise of the rest. And so it's really going to be amazing to see what happened. Nobody knows exactly how that snow globe is going to play out, but clearly there's a lot of rethinking about work itself, how much is going to be hybrid. Some people decided to move to other places. A lot of cities now fighting for talent, just as companies are fighting for talent. There's a battle for talent with mayors and CEOs all across the country. So I think the innovation landscape will look quite different 10 or 15 years from now. And the pandemic, when we look back, will be one of the catalysts, one of the tipping points that accelerated that.
For you as an investor personally, how do you imagine your work, daily life, and investing will be forever changed?
Well, one of the things we've been working hard at Revolution is building a network all across the country. As you know, we've talked about it in the past, the vast majority of venture capital, 75%, goes to just 3 states, California, New York, and Massachusetts. We've actually now invested in 35 states alongside 350 regional venture capitalists. So we've really tried to build this network for Revolution Growth, Revolution Ventures, and the Rise of the Rest seed fund that I think positions us well for what we believe will happen over the next decade. As a result, we have a partnership strategy, really building relationships with local entrepreneurs and venture capitalists, and then connecting them as part of this broader network that we're trying to build. And we're seeing great momentum in a lot of different cities. A lot of companies really are surprising us on the upside.
Are there any particular cities across the country in Middle America that are exciting from an innovation standpoint, perhaps more so than others?
Yeah, but we now invest, I said, a number of states, also over 70 different cities. So we don't want to pick, it's like asking who your favorite child is. That's difficult. But we have seen a lot of momentum in a variety of different cities. Just last week in Atlanta, for example, there was a $12 billion acquisition of a company there, MailChimp. That surprised people in terms of what's possible in Atlanta. We've seen a lot of big exits in Ann Arbor and Indianapolis and Austin and others. And some of our own Revolution portfolio companies, there's a lot of momentum for a company focused on sustainable packaging in Richmond, Virginia. Another company that's doing logistics in Atlanta. This company FreightWaves in Chattanooga that has a kind of like a Bloomberg data platform for the logistics and trucking industry. And since a lot of the big trucking companies are located in Chattanooga, it actually makes more sense for them to be there than to be in Silicon Valley. So I think the trends are really moving in favor of a more inclusive innovation economy. Sure, Silicon Valley, New York, Boston, a few places will continue to dominate, but I think they'll dominate less in the next decade, and I think the pandemic will be part of the reason for that.
How do you think cities will survive the pandemic in general? I mean, obviously we're seeing more blending with suburbs and beyond, but what remains after this?
Well, there's still a lot of value to cities. Actually, I woke up this morning, I was in Washington, D.C. with your boss, Mike Bloomberg, and he was, of course, talking about New York and how wonderful, great city and why everybody wants to be in New York or London or one of these great mega superstar cities. But there is some value to be clustered for entrepreneurship. So while there are always going to be some possibilities around rural entrepreneurship, and if infrastructure bill gets done, which it likely will get done, and rural broadband is funded, that will help a lot of entrepreneurs, a lot of places. But we think what will happen over the next decade is instead of just a few cities dominating, a few dozen cities will stand up. And some of that ties into this point I made earlier about the industry expertise, the domain expertise, the partnerships, the trust, the credibility you'll need to disrupt some of these big sectors in ag tech and health tech and so forth. Will advantage some of the entrepreneurs in some of these places if those cities and those companies win the battle essentially for talent. There's been a brain drain over the last several decades. I think the pandemic has reversed that at least a little bit. I think you're now seeing more venture firms in places like Silicon Valley looking in other parts of the country. I think that will accelerate over the next decade. We've been saying this for a long time. It's great to see it now happening.
Speaking of Washington, Congress is considering major changes to tax law that could impact tech founders, early tech employees, that QSBS tax break that I'm sure you're familiar with. This would raise taxes on some of these early stock options that tech employees benefit from. There are folks who say this tax will hurt innovation. On the other side, folks say it's, lower taxes than the rest of us pay. Do you think this is fair or not?
Well, I think I'll let Congress figure out what exactly to do in terms of the actual package. I think we do need to be careful to make sure while we raise the money we need to fund core national priorities and deal with some of the issues around income inequality, other things that are really quite troubling, that we do it in a way that doesn't diminish exactly what we're talking about, the willingness for people to invest in young companies, willingness for entrepreneurs to take the risk of starting companies. So we do need to be careful. And things like carried interest, other kinds of things, I think it's fair to have it on the table, but it seems like it should be different for hedge funds that are trading in sometimes seconds, or even private equity funds that are flipping kind of in many cases mature businesses versus these young startups that are backed by venture capital that tend to have a 5, sometimes 10+ year kind of exit horizon. We actually need more capital backing more entrepreneurs in more places. So as this gets negotiated, hopefully there will be an understanding of the need for that. One thing that's encouraging, one of the pieces of legislation now being considered by Congress is to increase the R&D investment for our country and to fund about a dozen regional hubs, significant money that would be funded to help take these cities to the next level, to help these rise of the rest cities rise. So hopefully that will be part of it as well. Anything that helps drive more innovation, drive more job creation, and does it in a more inclusive way, bringing along more people and more places, I think would be a good thing. Things that end up, even if well-intentioned, undermining that, obviously it would be a concern.
You paused your Rise of the Rest bus store because of COVID, but you're still accepting applications from startups for the seed fund. I believe you've stopped accepting, but you have been accepting submissions, and you're about to announce some winners. What are the trends you've seen in the startups that are applying for money quickly? Any new, fresh ideas that you haven't seen before? Oh, yeah. And some of the companies that we back through these, we've now done bus tours 8 times to, I think it's 43 different cities, and some remarkable ideas that emerge, and some of those companies are scaling in really extraordinary kind of ways. And we've seen that so far. The tour we had to postpone twice, not once, but twice, was taking us to places like Oklahoma City, Wichita, Kansas City, and there really was a lot of Bentonville, Arkansas. And so some of not surprisingly, some of the businesses being formed there are around the connection to that. Logistics, for example, because of Walmart's presence in Northwest Arkansas. Ag tech, because that's a major part of what St. Louis is doing, Monsanto being headquartered there and for many years. So we're seeing this next generation of startups building on the expertise and the networks in those cities to really try to disrupt some of those incumbents. And we'll see exactly what happens in terms of when we announce those winners, but I think you could expect that some of them will be tied into what is special about those places and what will advantage those places in this next wave if more venture capitalists do focus on other parts of the country, and if entrepreneurs who left because there was a sense there was no opportunity there return, and the next generation graduating schools stay there. I think you'll see more and more of these cities rise up. You'll see much more innovation happening all over the country, job creation happening all over the country. And frankly, for all the investors out there, when I talk about this, part of this is trying to be almost a point about fairness and leveling the playing field, but I also think this is one of the great investment opportunities of all time. It's an arbitrage because valuations in some places like Silicon Valley are much higher than if those same companies were in other parts of the country. So from an investor standpoint, it makes a lot of sense to really focus on what's happening everywhere, not just what's happening in your own backyard.